What's up, traders? My name is Layla, and welcome back to this week's no-nonsense stock market recap from Bullish Bear. U.S. stocks experienced a roller coaster week highlighted by geopolitical tensions, soaring oil prices, and a steady stream of corporate and economic news that kept investors firmly on their toes. The week began with markets trying to recover from Monday's early losses tied to escalating U.S.-Israel strikes on Iran and Tehran's counterattacks, which sent shivers through global energy and transportation markets. The closure of the Strait of Hormuz and the potential threat to a key artery of global oil supply pushed crude prices above $80 per barrel at times. Energy stocks quickly jumped into the driver's seat, while airlines and other fuel-sensitive industries felt the squeeze of rising operating costs. Meanwhile, investors did what investors often do in moments of uncertainty. They ran straight towards safe havens. Gold, silver, and the US dollar all strengthened as traders looked for little stability in an otherwise very noisy week. By midweek, markets managed to catch their breath. Stocks climbed modestly after stronger than expected February private payroll data from ADP signaled the U.S. labor market still has plenty of life left in it. Tech shares led the rebound on Wednesday, fueled by ongoing enthusiasm around artificial intelligence spending. Nvidia's confirmation of a massive $30 billion investment in OpenAI, combined with strong revenue guidance from Broadcom, highlighted just how strong demand for AI chips and infrastructure continues to be, sending semiconductor stocks way higher. Crypto joined the party as well. Bitcoin surged past $73,000 as investors treated digital assets as both an inflation hedge and a geopolitical hedge, basically a hedge for just about everything happening this week. Not all sectors shared the same momentum, however. Consumer and retail stocks delivered mixed performances as rising gasoline prices began weighing on consumer sentiment. At the same time, uncertainty around the Federal Reserve's timeline for interest rate cuts kept investors second-guessing on how quickly financial conditions might loosen. Corporate headlines added even more twists to the week. Robinhood introduced its invite-only $695 platinum card, signaling a push deeper into premium fintech services, while Apple unveiled new lower-cost iPhone 17e and M4-powered iPad Air models, reminding everyone that the consumer tech cycle never really takes a break. Nvidia also paused production of its China-bound H200 AI chips, underscoring the growing regulatory challenges facing U.S. tech exports. At the same time, OpenAI CEO Sam Altman stirred debate around government oversight versus corporate power in the AI space, particularly amid the ongoing Anthropic Pentagon contract tensions. Elsewhere, Berkshire Hathaway captured attention after new CEO Greg Abel resumed share buybacks for the first time since 2024 and personally invested $15 million in company stock, an unmistakable signal of confidence that investors were quick to notice. Geopolitical developments continue to drive volatility throughout the week, with Middle East tensions intensifying following U.S. and Israeli strikes on Iran and subsequent Iranian retaliation. Sectors tied to global trade and transportation, like materials, industrials, and airlines, experienced heightened swings. Defense stocks surged as markets priced in the possibility of increased military spending and production, while energy giants such as Exxon, ConocoPhillips, and Chevron benefited from climbing oil prices. On the economic front, investors kept a close watch on labor data and interest rate expectations. February jobless claims came in largely as expected, while bond yields rose for the fourth consecutive day. Markets have since pushed back expectations for Federal Reserve rate cuts, now projecting the next reduction in September 2026, with another potentially arriving in 2027. Corporate earnings added another layer of intrigue. Broadcom beat expectations, while companies like StubHub and Ciena still saw their shares pull back despite meeting forecasts. Another classic case of the market's favorite phrase, buy the rumor, sell the fact. All told, it was a week packed with volatility, headlines, and more than a few curveballs for investors. Looking ahead, markets will be watching Middle East developments closely while also preparing for next week's key catalysts, including the February non-farm payrolls report and fresh earnings from companies like Oracle, Hewlett-Packard, and Adobe. Because if this week proved anything, it's that markets rarely sit still for long, and there's always another headline waiting around the corner. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.